welcome to Chapter 6, Accounting for Labour. So in this chapter we're going to be looking at the next important element of cost for a manufacturing business, which is the labour cost. In this chapter we're going to be looking at a number of things, including distinguishing between direct and indirect labour based on the cost classification that we looked at earlier on in your course. Like accounting for materials, this area of the syllabus is likely to appear in section A of the exam. Okay, let's flip over to your summary diagram and we'll look in more detail what we're going to cover in chapter 6.
So we're thinking then about different ways that labour can be remunerated for the work that they do, and we'll also be thinking about how we can measure the activity and the performance of our labour, as well as thinking about rates of labour turnover, so the number of staff that are leaving and being replaced. The bulk of the chapter then concerns with how we actually account for the labour costs within our accounts. So along with all of the other costs incurred by a business, we need to think about how we can analyse and record our labour. And with labour then, we need to know two things. We need to know about the time taken as well as the cost of that labour. So let's think about different methods then of remuneration. In the majority of organisations, labour will be paid based on the number of hours worked. So a time-based system based on hours worked. And depending on the organisation and depending on the rate of pay for the employees, if the employee works more than their basic hours, they might get an overtime payment. And we'll be looking at how to account for that overtime payment in this chapter. It's probably one of the more difficult aspects of the chapter. Sometimes then people might not be paid by the hour but by the number of items completed, so paid per units produced. In these situations it's very common that piece workers will be guaranteed a minimum wage, and if we relate that back to our cost classification then, if we've got a piecework system, the minimum wage will be a fixed cost for the business, and then the variable costs will be the cost that they are paid per each item produced. And so the fixed cost combined with a variable cost is going to leave us with a mixed cost for a piecework labour employee. People might also be paid on a bonus or an incentive scheme where they get some kind of bonus if they work faster. So the piecework system, the more you do in a period of time, the better your rate of pay will be. The bonus systems were introduced then for time-based workers as a way of compensating them for being more efficient and increasing their productivity. And in a bonus system then, you get paid if you exceed the target, and that could be for an individual target or it could be for a group. In example 1 then, we have a worker who is paid on a time rate system of $6 per hour for the basic 8 hours per day. But we're also given some information about the standard time to produce one unit, which is 2 minutes. We're also given some time about a bonus that they get. So if they work faster, they get 75% of the time that they've saved at the basic rate. So it's more cost effective for the company because they are getting the work done at 75% of the basic rate, but there's also an incentive for the employee to work harder because they're going to get a bonus if they're able to produce the units in less than 2 minutes. So when we're doing a question like this, we've got two elements to think about when we're looking at the cost of producing 340 units in one day. So first of all then, this employee is going to get their basic pay, and their basic pay will be 8 hours at $6 per hour. We also need to think about an element then of bonus that they might get. So the standard time for 340 units at 2 minutes each is 680 minutes, or how many hours, divide that by 60, and that gives us 11 1/3 hours. So 11 hours and 20 minutes. The time allowed, or the time that they used, was 8 hours. So therefore they've managed to do this in 3 1/3 hours less than the standard time, and they get a bonus then of $6 per hour for 75% of the time saved. So 3 1/3 multiplied by 6 multiplied by 0.75 means that they're going to get a bonus of $15. Add that onto their $48 of basic pay, and the cost then is $63. That's what the employee is going to get paid. So you can see then with this bonus scheme there is a benefit to the employee in producing more units than were expected during the day, and there's obviously a bonus to the company because they've increased productivity. In example 2 then we have a piecework system which is being used to remunerate labour. And what we've got here then is a variable piecework system, because the more units they complete, the more they're paid for those particular units. And we're looking then at what happens when an employee produces 163 units in a week, what they're going to be paid. Now, what we have to realise here and read the question very carefully, because there are no set rules about, is whether or not the increased rate of pay applies to all units or whether it applies only to units within a particular band. I think here then it's quite clear that you're going to get $4 per unit for the first 100, but that incremental 50 cents is only going to be applicable from units 101 to 150. And similarly, the $5 will only be paid for any units over 151. So we don't need to worry about over 200 units because they've not managed to do that many. So the first 100 units then are going to be paid at $4 per unit. The next 50 units, so 101 to 150, are going to be paid at $4.50. That's 225. And then finally we've got the remaining 13 units, which are going to be paid at $5 per unit, giving us 65. So our total pay for week 48 will be $690. After thinking about the methods of remuneration, we need to think about monitoring labour activity. Production then is the amount or the quantity of output that has been produced. Productivity then is how efficiently that output was produced. And if a business can increase its productivity, that's very important because it will mean that the cost producing each unit will fall. The standard hour of production is how long we think it should take for one unit to be produced, and so a standard hour is a quantity of work, not a period of time. So in lecture example 1, where the standard time to produce one unit was 2 minutes, that meant that the standard quantity of work for 1 hour should have been 30 units. So standard labour hours then are equal to the actual units output times by the standard time per unit. So in that particular example, the actual number of units being produced was 340 units, and the standard time per unit was 2 minutes. And that was how we worked out that 680 minutes was our standard labour time. So here then in example 3, we're thinking about an employee who's making different types of units, A, B and C, and they've got different standard times available per unit, probably because of the complexity. And what we need to think about then are what are the standard hours that's been produced by the employee. And be careful then with these questions that you note the form that the answer is required in, because here then we need an answer in hours. But the information given to us up here is in minutes. So what would be a good idea then is to work in minutes and then divide our final answer by 60. Make sure that you do that last step, because even though you demonstrated that you know the right answer, if you don't give it in hours, you won't score any marks in the nature of this exam. So for A then, we're doing 200 units and each one takes 4 minutes. So we're looking at 800 minutes. For B then, we're making 350 of them and each one takes 2 minutes. So that's another 700 minutes. And finally, for product C, we've got 300 units and each one takes 3 minutes. So that gives us a total of 2,400 minutes divided by 60 gives us 40 hours. And it's our 40 hours that we would pop in to the box. As well as thinking about the standard hours, we can also look at the productivity of our labour force using the production volume ratios, which can be split down further into efficiency and capacity. So the efficiency ratio then is the standard hours for us to make our actual output, the sort of thing that we've been working out in lecture example 3, divided by the actual number of hours that they've worked, and we express it as a percentage, so we multiply by 100. With the capacity ratio then, we're looking at how many hours we worked divided by the budgeted number of hours. And if the actual hours worked are greater than the budgeted hours, then we will have increased capacity, we'll have worked at more than 100% capacity. The production volume ratio then is a combination of both of these, and we strip out the actual hours to give the standard hours to make actual output, divided by the budgeted hours multiplied by 100%, again to give us a percentage. So the production volume then looks at how well the labour force have done in terms of differences in efficiency and capacity. So you need to learn then those three formulas, and also that efficiency times capacity equals production volume. For example 4 then, Barnes, we've been given some information about the budget. So the plan was to make 13,000 units in 26,000 hours. So what we're being told then is that each unit was planning to take 2 hours. What actually happened then was that the company made 14,000 units and they did it in 35,000 hours. What we need to do then is to work out the efficiency, capacity and production volume ratios. If we start off then with the efficiency ratio, we're thinking then about how quickly they made the actual production compared to how long it should have taken us. So 14,000 units then at 2 hours each should have taken 28,000 hours. They did take 35,000 hours. So that gives us an efficiency ratio of 80%, i.e. they were only working at 4/5 of the speed they should have done. The capacity ratio then, remember, is the actual hours worked, which in this case was 35,000, divided by the budgeted hours of 26,000. So you can see that we work significantly more hours than planned, and that comes in at 134.6%. Remembering to give the answers to 1 decimal place because that was what was requested in the question. In part C, when you work out the production volume ratio, you can either use the formula for the production volume, so standard hours to make actual output, which was 28,000, divided by budgeted hours of 26,000, which gives us 107.7%, or you can multiply part A's answer by part B's answer and then multiply that by 100, so that's 107.7%. Labour turnover then is the rate at which employees leave a company, or the company loses its employees. Ideally then, if staff are motivated and satisfied, for efficiency purposes, labour turnover will be as low as possible. The reasons why people leave then are fairly self-explanatory, common sense. So people leave because they're demotivated, they don't like their job, they don't find it interesting and challenging, they don't feel the rewards are good enough, or they feel that a competitor can offer them a better deal. Those are all controllable causes and the company can influence them. We also have an uncontrollable causes, so staff then are recruited as trainees and once qualified they will leave, perhaps because they have more options open to them. So when I finished my training contract with an accountancy firm, then I had a lot more options available to me and chose to come to BPP. Labour turnover then is another formula that we need to learn, and it's the number of replacements divided by the average employees in a period, and we express that as a percentage, and that will give us the rate of labour turnover. In example 5 then, we're looking at calculating the labour turnover rate for the year. So we're going to need to use the formula then for labour turnover. We need to look at the replacements during the year divided by the average number of employees during the year. So having a look at the information in the scenario then, we start the year with 1,000 members of staff, and at the end it's reduced to 920 because of redundancies being made. So the average number of employees during the period is 1,920 divided by 2. So our average number of employees is 960. 20 more staff than anticipated took redundancy, and so we had to replace 20 of them. So for our labour turnover rate then, we've got 20 divided by 960 expressed as a percentage. So just over 2% then of staff were replaced during the period in labour turnover terms. One of the reasons then for wishing to keep labour turnover as low as possible is to do with the costs associated with replacing labour. So if somebody leaves then, we've got the costs of selecting and placing a new member of employee with the team. So all of the recruitment costs and all of the advertising and selection process. Also, new labour is going to be inefficient. When you start a new job, it takes you time to get up to speed with the processes, and you're going to need training. There's also a time lag between identifying the need for a new member of staff and getting somebody in place who is appropriately qualified and has the skills to do so. So it might have to resort to temporary labour. Because the costs then with training and recruiting new members of staff are high, businesses will look at trying to prevent people leaving. And those preventative costs are basically trying to maintain good relationships with your employees. So those could be things like providing you with canteen facilities, sports events, social events, Christmas party, things then that make you feel a valued member of employee, and also any benefits that you are offered, such as a dental plan or a season ticket loan. With all of our costs then, it's very important that we know how to break them down into direct costs, which can be directly traced to units of production, and indirect costs. And labour costs are no exception. What we need to do then is to understand how our direct workers' costs will be classified and how our indirect workers' costs will be classified. And it's not quite as straightforward as this table shows, as direct workers will always be a direct cost and indirect workers will always be an indirect cost. Instead, there are certain rules that we have to follow. For the normal basic pay then, direct workers will always be a direct cost and indirect workers an indirect cost. The waters get a bit muddied then when we're looking at overtime. And with our overtime, we have to split it out into the basic pay and the overtime premium. And we also have to split it out into the reason why overtime is being carried out. Is it for general production? Is it for general non-production? Or is it specific overtime that's being carried out at the specific request of a customer? For our direct workers, unless it is non-production overtime, it will always be a direct cost, the basic element, but the overtime premium will only be a direct cost if the work is specific overtime for specific products at the customer's request. So we can trace the extra cost of completing those units to particular units. If we have overtime then to cope with general production, the basic element can be treated as a direct cost, but the overtime premium must be treated as an indirect cost, because we can't have some products then that cost more just because they were manufactured outside of standard hours. If our direct workers then are doing non-production work, so perhaps tidying up the factory as overtime, both the basic and the overtime premium will be treated as an indirect cost. With our indirect workers then, it's always indirect costs unless they are doing specific overtime. And if they do specific overtime, both the basic and the premium will be directly attributed to the products that they were working on during that overtime. So Busy Bees then has two types of labour: skilled workers who are direct workers and semi-skilled workers who ordinarily are indirect. And we're given some information about their rates of pay and how many of each employee we've got and the number of hours they work a week. All of the skilled workers then have done 50 hours overtime this week, 20 hours on a specific order and 30 hours on general production. So we're going to have to classify those 50 hours of overtime differently, because some of them were for a specific order and some of them were for general production. The semi-skilled workers then have also done some overtime, 20 hours, 10 hours on a specific order at the customer's request, and 10 hours to meet general production requirements. And overtime is paid at time and a half. So that time and a half then is going to be the basic element of their basic pay of $10 and $7.50 depending on their skill level. And then we're going to have the premium, which is going to be at $5 and $3.75. So basically a skilled member of staff who works overtime is going to get $15 an hour rather than their standard $10 per hour. And what we want to do then is to classify our labour costs into direct and indirect costs. So probably worth setting up a little list similar to the table. Now, the basic hours that they've worked are probably the easiest to deal with. The basic hours for the skilled employees, $10 per hour, and they work 35 hours per week, and there are 7 of them. So that's $2,450. Now the basic pay for the semi-skilled is $7.50 per hour, 35 hours in a week, but we've just got 4 of them. So that'll be $1,050. The skilled workers then have done 50 hours of overtime, some of which was on a specific order and some of which was on general production. It's easiest to split this into their basic pay for those 50 hours and the overtime premium. So the skilled overtime basic, we've got $10 per hour and 50 hours. But we've then got this overtime premium for the skilled workers of $5 per hour. The 20 hours for the specific order will be a direct cost, but the 30 hours of general production will be an indirect cost. We can then do the same with the overtime for the semi-skilled workers. The overtime for the semi-skilled workers then, 10 hours was on a specific order. So that means that the full amount of $11.25 per hour will all be a direct cost. The overtime that the semi-skilled have done that was for general production requirements will all be an indirect cost because their basic pay is indirect and also their premium will be indirect because it's for general production. Then we can tot up the totals to give us our answers. Now, it's likely that you would have to just give the total for direct or indirect, but it's important that you consider whose request and also what's going to happen to the two elements of overtime, the basic and the premium, separately. And there are slightly different ways of calculating this and carving it up, but you just need to take a step-by-step and logical approach. Having worked out the split between basic pay and overtime premium for direct workers and indirect workers to give us our total direct labour cost and our total indirect labour cost, we need to know how to account for this in the ledgers of our accounts. So we've got some double entry to be aware of here. So the first one is then when the wages are paid to the employees, a payment from the company's accounts is always going to result to a credit to the bank, and we're going to have a debit to the wages control account because that's going to be an expense. In addition then to the money that's paid to the employees through the credit of the bank, we might have to credit the PAYE control account and the National Insurance control account for amounts then that are owed to the government bodies through tax. Because as you know, we don't get to take home, sadly, all of our pay. When labour then is used within a production process in the organisation, the direct labour costs will be transferred from the wages control account with a debit to the work in progress account to increase the cost of production and a credit to the wages control account to that control account. And indirect labour costs will also be a credit to the wages control account, but instead of a debit to work in progress, it's a debit to the production overhead account. And you can see here then that we've got a summary of what the wages control account will look like here. So we're going to have then the amount that's being paid as a credit to the bank and the PAYE and the National Insurance accounts. So that'll be the actual wages, and then it will get split out amongst work in progress and production overheads. Work in progress being the direct labour costs and production overheads being the indirect. And any balancing figure there will go to the income statement. In worked example 1 then, we can use the data from lecture example 6 for busy bees, and we can see then the split in the wages control account. So we had the direct labour costs of £3,162.50, which will be debited to the WIP account, and we have the indirect costs of $1,312.50, which will be debited to the production overheads. So the total spend on labour for that period was $4,475. So we need the same figures on the debit side, and that will be split out between the pay to employees and the amount that's paid in taxes as deductions. And you won't need to worry about how to calculate that split of deductions. It will be given to you in the exam. In this chapter then we were accounting for labour in preparation for a Section A question. So we looked at the 3 different methods of remuneration: time-based systems where we're paid by the hour, piecework where you're paid per unit, and a bonus system which provides an incentive for hourly paid staff to increase their productivity. Labour activity then can be measured through the efficiency with which output has been produced, and we can think about monitoring our productivity through efficiency and capacity ratios, which combine to give the production volume ratios, i.e. looking at how quickly output was produced compared with the number of hours that you plan to produce. Labour turnover then is thinking about the number of people that are leaving and having to be replaced. That's important because high rates of labour turnover increase labour costs. So although some turnover is inevitable, businesses want to look at ways of reducing labour turnover if they can. One of the most important areas of the chapter then was how to account for labour costs. So being able to classify direct and indirect costs and the associated double entry to record those costs. So direct costs then will be debited to the work in progress account from the wages control account, and indirect labour will be debited to the production overheads account. As a general rule then, direct costs are direct workers if they are working overtime at a specific customer's request and all of their basic pay.